Let's talk some crypto. My main focus point concerns this question: the crypto retirement debate. Is a small bet the key to future wealth? Well, anytime we're considering putting any type of asset in any of our investment accounts, this is how you can tell it's a live show because sometimes I can't speak. You have to consider what are the characteristics of that asset. Well, crypto, it's highly volatile. And because it's highly volatile, that means the risk profile, because volatility is a measure of risk, is very risky, which means it's not suited for everyone. Retirement investors specifically, if you're thinking about putting this in your IRA, you have to weigh risk, you have to weigh tolerance, you have to weigh timeline, you have to weigh what your financial goals are all carefully. Now, there can be some benefits. Cryptocurrency, and when I'm saying that I primarily mean Bitcoin, has over time had extraordinary returns. Extraordinary returns. And so I understand the inclination to say, okay, do I want some sort of allocation to this? Well, most self-directed IRAs do offer access to crypto, right? If you're looking to put cryptocurrency within your retirement allocation, this is probably where you want to go. Most employee-sponsored 401ks, well, they still restrict it due to some regulatory concerns. And this all comes on a backdrop of this surge we've seen in early 2025 and through most of 2025, though it's tapered off a little bit, when Bitcoin hit all-time highs. It drew the attention to crypto's long-term growth potential, despite that short-term volatility. But it is a different type of asset, right? It's not similar to stocks. There is no future cash flows that are expected from that company that are returned to shareholders. It's different from bonds. You don't have a set payment structure and timeline over which you can expect some income. There's speculative risk, given that it is the ultimate long duration asset. There is no future flows towards you. There is a lot of speculation there. A lot of people don't understand what is going on with it. They know that Bitcoin is something that exists in some abstract form, but the principles behind why some people believe it has value, whether or not it does, they don't understand those. And there's also evolving regulation, and these can cause pretty sharp fluctuations, but more importantly for you, sharp investor losses. Now, if you're considering putting crypto within your portfolio, we don't want to have some sort of YOLO approach where you take all your money, you throw it in Bitcoin, and you hope that 10, 20, 30 years down the road, you have a lot of money. Especially if you're nearing retirement, because we talk about this all the time. It doesn't matter what the asset is. You can take on less risk if you need the money sooner. If you're a year out from retirement, you probably want to take a smaller allocation, especially given year-to-year volatility of cryptocurrency. If you're further out, you can maybe stomach the risks even more. Small allocations are typically what are recommended, between 1% and 5% of your portfolio. Now, the correlations between Bitcoin and some equities, specifically Qs, have increased over time. But that doesn't mean that it doesn't offer some sort of diversification benefit, because there are low correlations with traditional assets. And historically, they have delivered, again, those strong returns over longer periods of time. But risk mitigation is where you want to consider, is what you want to consider if you want to enter these positions: dollar cost averaging, periodic rebalancing, and longer holding periods. It's essential for holders of cryptocurrency to want to have a positive investment experience. One of the big benefits of putting it in your self-directed IRA, tax deferral, means taxes only apply upon the withdrawal. And if you have a large escalatory path of return, deferring those taxes can be very, very beneficial to you. Now, in the wake of the Trump administration passing new regulations with regards to stablecoin, the Genius Act, some barriers are starting to come down, but barriers still do exist. Even with the Financial Freedom Act reintroduction in 2025, it may expand access over time. We aren't quite there yet. And so it is an evolving landscape that can greatly affect your return profile and the value of the asset. Last but not least, it is not like other assets, right? Understanding the risks of not self-custodying, i.e. needing to use qualified custodians and avoiding speculative behavior, is a necessity if you decide that cryptocurrency is an allocation you want in your portfolios.